Hey everyone, I'm Jeremy Szafron and this is Kitco News. If you haven't already, don't forget to like and subscribe to our channel for all the latest in markets and commodities. Well, today on another episode of Chart This with Gary Wagner, we're seeing gold hit another all-time high. Also, some profit being taken at these levels. Not completely surprising. Of course, we'll break it down with Gary. Silver also reaching levels we have not seen in 2 years. What's behind the movements? Plus, copper also seeing a 14-month high. We'll take a look at the technical indicators. You see that handsome man there, Gary Wagner, back on the show. Thanks for coming on and explaining this all to our audience today again, Gary.
Thanks so much for having me, as always. Thank you.
Yeah, of course. You know, it's so funny because it's almost as though it's not breaking news anymore when we say gold at an all-time high. Well, you and I have discussed this so many times, but yet again, we're at an all-time high. And I'm curious, I want you to bring up the chart here and talk about this trend. Is it here to continue, or are we going to see a reversal?
Well, I want to look at a couple of things. First spot, and then we'll look quickly at futures. When we get to new record high closes, as a market technician, our tools are very limited. We can look, when we look at silver, you'll see we can compare it to how it was when it was at this price in a former time period. We cannot do that with gold because we are in uncharted territory. So this is a daily candlestick chart of spot gold, currently at 2338.87. And a few weeks ago, we talked about this flag formation, which really was a good key indication because, as you can see, once it broke above this line here, that's when we got our breakout. Now, what I've done is a basic extension. I'm starting at the lows in October up to the highs that came in December at about 2130. And then we're starting our extension from this low right here, which is just around 2000. And once we got this clear breakout, we saw that size of the candlesticks move up tremendously. And you'll also notice that in terms of getting some sort of market stagnation or consolidation in the case of gold, we saw it right here. And this was back a couple of weeks ago. And then what I'm looking at is we just broke above what I call the one-to-one relationship. In other words, I'm measuring the price move here and then comparing it to the price move here. And so when we do that, what I'm trying to do is get a feel for where it could go. So what we see is that we've already exceeded the entire range from October of about 1800 to about 2100. We've exceeded that. That says one-to-one at 2321. The next level of any kind of real technical resistance doesn't come in till about $2,400 per ounce, $23.99. That is 0.236 Fibonacci extension. So it's a little bit different in the way that we have to do it here, because to mark anything with an all-time high, as we're seeing today, we don't have any historical data to go back to.
Right. You know, I'm curious, given gold's rally in the face of a stronger U.S. dollar, is this a speculative bubble or is there a fundamental shift driving this growth? I mean, we keep seeing the price of gold continue to climb.
Well, many analysts, including myself, have noticed a trio of indicators and fundamental environment that has laid the backdrop for what we're experiencing. The big thing has been central buying accumulation. China was the largest buyer last year. This is according to the World Gold Council. Poland came in second with adding to their reserves. But the key is that huge central bank buying, and the thing about when a central bank buys is they typically don't sell. It goes into their reserves and it stays there. So it basically takes that gold out of the system for physical purchases. That's the first thing. The second thing is the expectations of rate cuts happening by the Federal Reserve as well as the ECB later on this year. Right. And then lastly is the geopolitical tension. So we've got all three things that are working, and that's what's caused the attention of large institutional buyers, large hedge funds, large money managers to enter this arena where they would typically have a much smaller stake in the game, so to speak. And so because we've got those three elements really moving gold to these record highs, what's happening is that we're getting this continuation. So this is a weekly chart we're looking at. So each of these candlesticks represents a week, and I'm going back to about 2017. But as you can see on the spot gold, this is a daily chart. So you can see what it's done really since February when it hit the low of about 2000 and hasn't looked back. 2000 to 2300, we're talking about a sizable move. Typically, a rally in gold's about 160 to 200. We're basically have doubled that at 300.
Let's go back a little bit. I mean, we talked about the central bank buying. We've seen a sustainable approach to that. I mean, they're really increasing their reserves. China slowed down a little bit, but let's talk about this. Could we see a market correction if they slow down their buying pace?
We could see a market correction at any point due to any number of things, because traders that are net long and have racked up sizable profits are looking for signs of weakness to exit the trade and bank those profits. The futures traders are, because that is typically what we're looking to do, is if we see weakness in the market to stand back. This is unprecedented territory because we typically, as I said, don't get a $300+ rally, and that's what we're seeing.
Crazy. Okay, let's switch over a little bit to silver. It's reached a 2-year high. Talk about the chart a little bit and some of the patterns that you're seeing. I'm curious if there's any indication of where silver prices might head next.
Okay. This one, to me, as a market technician, is a lot easier because we have historical data. These highs here that came in 2020 and this in February 2021 came in at around $31, $31.50. We're at a key level, $28 right now, $27.97. This is the most active July futures contract. And so we could see something come in at this point. And the reason being is when we look at, for example, this top here that came in at the beginning of 2022, that's what we do as market technicians. We look to see prior tops or bottoms in the market as price points or inflection points that if there is going to be weakness, we would see a pullback either here. If let's say silver breaks through here and continues to move higher, we're then wanting to look at the $30 because we had this one top here. But if it goes even higher than that, the top is about $32.50 before it starts breaking above recent records that it has had, not all-time record highs, but recent highs that we've seen in silver.
Gary, we know that silver is obviously an industrial metal. There's lots of ways to use it. Do you see industrial demand driving prices, or are investment flows the main driver here? What does it say about the volumes?
Well, what we can do is go ahead and pull up a volume, and that will give us an indication. And so let's go ahead and do that, because that is the easiest way to really see what we're doing. And as you can see, we had this big spike that came in. This is, again, a weekly chart. Let me change that to a daily so we can better ascertain everything. And now we can see, you see these huge spikes in volume that came in late last week and even today, where the volume is very much above the medium level of volume that came in. And we're not really half, but about 25 to 30% higher than normal volume in silver. So that's definitely pushing this. Again, this is a daily chart. So we can get an indication if the volume changes. What it does more than anything else is really change the liquidity of a market, because if there's not as many open contracts, what we call open interest, a buy and a sell being matched, what happens is it makes it more not difficult to get out, but you're not going to get out at the screen price that you see. There'll typically be a premium on top of that as volume starts to lighten. But when you see volume spike like this, the last time we saw it spike nearly this high was back in October 23, and that's when it moved from 24 up to 26, and we've taken that out. So these are the areas we want to look at for in silver.
So give me a little quote here in terms of your short-term forecast. I mean, you talked about the $30 level. Where are we going with silver?
Well, if silver continues to rise, we have to look at the $30 level. Let me go ahead and compress a little bit. Actually, we'll turn it into a weekly because that's the way to make sense out of this data. We have to really go back to, as I said, 2020 through 2021. These three tops here at $30 is really what we want to look at before we're going to see any real resistance on a technical basis come in. And the key about these technical levels is if it's industrial demand that's driving the markets higher, then typically what we see is a much more simplistic or strong move past these price points or inflection points simply because it's demand driven rather than technically driven. A lot of times you'll see analysts talk about a market that is technically driven, or there's a technical sell-off or fundamental sell-off. And right now, the fundamentals are so strong in gold that there are people looking at this as a safe haven also.
Yeah, no, I mean, it makes sense. Okay, switching over to copper, I know that we've been talking a little bit about this, you and I, because it's a 14-month high. So I'm curious, are we seeing signs of supply constraints, or is this movement more demand-driven?
Well, what I can say from the charts doesn't really address the demand as much. That's something that we address when we read about the fundamentals. The only thing that I'm seeing is if we look at the action today, and this really drove the market up to 815, but we have a gap that occurred between Tuesday's trading activity here and then Wednesday. A price gap is simply a void. In other words, we had copper on Tuesday close at 790 and then open at 795, and that creates a space in between these two candles. Market technicians call that filling the gap. We look for points in which a gap has occurred, which is a price void. And one theory states that typically, even in a bullish market, you can see it come back, and we call it backfilling this price point and filling that in. That's the only weakness that I'm seeing because, as you noted in the intro, volume is tremendous right now for the industrial metal.
Yeah, it's interesting. So taking a look there, there's no patterns that suggest a reversal?
No, I mean, you've got straight green candles that are consistent higher highs, except for Fridays was in what we call an inside trading day. But then you had this large breakout today starting the week. And so for that reason, there's nothing that tells us when we look at a chart that there's weakness yet. The one thing about technical analysis is that it does contain a lag in it. So we won't see a sell signal in there until we get a down day, a red candle like here or here. And that's what we'll look for. If you look here, we had this small doji that came in. This is January of 24. And that came after a fairly good rally. And that's what gave us an indication we could see softer prices. So when you look at this rally that started the 11th of March up to about the 19th of March, it wasn't until you got this first red candle that you had any indication that the market was either going to consolidate. Here we saw consolidation with a bias to the downside, and then a huge spike up with a spike in volume. And those are the true scenarios we look for a runaway market.
Quite a commodity cycle event here. It could be a cyclical one. Some people saying super cycle. What do you think?
Well, you know, myself and Joseph, my son, who helps me with some articles, address that in technical analysis of stocks and commodities and talked about the super cycle in gold. These are absolutely super cycles in that we're looking at a series of higher highs, new records. We're really seeing that play out in gold and in copper over the last couple of weeks also. We are definitely seeing long-term cycles. And the way we'll look at that is a 2-week chart or even a monthly chart to capture an idea of that. And it's a good thing we can talk about on our next show.
Absolutely, and I'm looking forward to it. Gary Wagner joining us from Hawaii again. Gary, thanks again for coming on Chart This with you. Gary Wagner.
Thanks so much for having me, as always.
Appreciate your time. And don't forget to subscribe and leave a comment letting me know what you'd like to ask Gary next week in our Chart This segment. I'm Jerry Szafron. Thanks again for watching Kitco News.